taxpayers! Welcome to the Digitalized Taxpayers Briefing and Orientation. In this video, I will be discussing to you income tax and the basic information that you need in filing your income tax returns. Who are our taxpayers? We have individuals, partnerships, and corporations. Let us first discuss individuals. Sino-sino po ba ang mga individuals required to file income tax returns? Number 1, individuals engaged in business or practice of profession regardless of the results of operations. Ibig sabihin, pag tayo po ay nagnenegosyo, whether income or loss tayo for the taxable period, we have to file our income tax returns. Number 2, individuals deriving compensation income from 2 or more employers, concurrently or successively at any time during the taxable year. So what if dalawa yung trabaho mo? Employed ka in 2 companies at the same time. Hindi ka na qualified for substituted filing, thus, kailangan mo nang i-file yung sarili mong income tax returns. Another scenario is kapag nagtrabaho ka in one company, nag-resign ka, and natanggap ka sa new company within the same taxable year. Ibig sabihin, nagkaroon ka ng dalawang employers in one specific taxable year, hindi ka na qualified for substituted filing. Therefore, you have to file your own income tax returns. Number 3, employees deriving compensation income within the taxable year wherein the tax has not been withheld correctly. Ibig sabihin, the tax withheld is not equal to your tax due. Therefore, you have to file your own income tax return. There are 3 forms available for the annual income tax return of an individual taxpayer. We have the 1700, the 1701A, and the 1701. The BIR Form 1700 is used by individuals earning purely compensation income. Ma'am, hindi po ba pag purely compensation income, si employer na yung magpa-file for us? Yes po. However, pag may mga requirements na hindi na-meet for substituted filing, kagaya ng mga na-discuss natin kanina, you are required to file your own income tax returns. Next is the Form 1701A. This form is used by individuals earning income purely from business or the exercise of profession, and those who opted for OST as their mode of deduction, as well as those who availed for the 8% flat income tax rate. Third is BIR Form 1701. This form is used by persons engaged in business or mixed income earners. Aside from the annual income tax return, taxpayers are also required to file quarterly. So the form to be used for that is BIR Form 1701Q. Now let us focus our discussion on these 2 forms. Since 1701A and 1701 are actually just similar to each other, let us go through them side by side. Part 1 of the returns is just the background information of the taxpayer. So of course, you have to provide for the PIN, the RDO code, the name, the registered address, the contact number, and all other necessary information. Now for the Part 2, it is where you can find your total tax payable. Here you have your tax due less your tax credits as well as the penalties imposed for late filing or non-filing of the return. After deducting such, you will then come up with your total income tax payable. Part 3 is the details of your payment. There will be a machine validation in case you file through the authorized agent bank. But if not, then you have to attach your official receipt. This will also be stamped received by the receiving office or the authorized agent bank itself. For the Part 4, dito na po nag-differ yung dalawang forms natin because in 1701A, Part 4 is already the computation of income tax, while in 1701, Part 4 is just the background information of the spouse. Let us tackle first Part 4 of 1701A. The computation of income tax in this form is subdivided into 2 parts. If you avail for the optional standard deduction, you have to fill in these items. While if you availed for the 8% income tax rate, you have to fill in these items. In Part 4A, you have to provide for the amount of your sales or revenues, less your sales returns and allowances, to get your net sales or revenues for the taxable year. From there, you will deduct your optional standard deduction. Ma'am, ano po ba yung optional standard deduction? It pertains to 40% deduction to your gross income. So instead of tracking all of your expenses, hanapin lahat ng mga resibo, lahat ng mga papel, you can just declare that 40% of your annual gross income is your expense. Therefore, only 60% is taxable. After that, you can now compute for your income tax due using the graduated income tax rates. Part 4B are the items that you have to fill in if you availed for the 8% income tax rate. Pwede kang mag-avail ng 8% if na-meet mo ang mga requirements na to. Number 1, your total sales or gross receipts should not exceed 3 million pesos. Number 2, you shouldn't be a VAT-registered taxpayer nor subject to other percentage taxes. And number 3, you shouldn't be a partner of a general professional partnership. So, ganun pa rin po, you still have to provide the total amount of your sales or revenues. And since you availed of the 8% income tax rate, the option of optional standard deduction and the itemized deduction is no longer available. The maximum amount deductible to your income is the 250,000 exemption. Then you have your taxable income. Multiply it by 8% to get your income tax due. Part 4C is your tax credits or payments. Then the Part 5 is the background information on spouse, which is the same with the Part 4 of Form 1701 as previously shown in this video. Now we are done with BIR Form 1701A. Let us now proceed to the computation of tax using BIR Form 1701. Ma'am, what if po I am an employee and at the same time I own a small business? What form should I use? That's the time we're gonna use BIR Form 1701 because you are already considered a mixed income earner. Since we already discussed the first 4 parts of the form, let us proceed to the Part 5 or the computation part. This part is subdivided into 6 schedules. In Schedule 1, you will indicate the data of your compensation income and the tax withheld. Basically, you will transfer the data from your Form 2316 provided by your employer. In Schedule 2, you will compute the tax due for your compensation income. You already have the amount of gross compensation income indicated in Schedule 1. Deduct from it the non-taxable compensation or the exempt compensation to get the taxable compensation income. Then, multiply it to the applicable tax rate to get your tax due for compensation income. Now let us proceed to Schedule 3. It is where you compute your taxable business income. For your business income, if you are using the graduated rates, you have to fill in these items. But if you avail for the 8% flat income tax rate, you have to fill in these items. If you are using the graduated income tax rates, these are the items that you have to provide. The total amount of sales or revenues, less sales returns, allowances, and discounts if applicable. Then deduct your cost of sales or services. Take note that the cost of sales or services can only be deducted if an individual taxpayer avails for itemized deductions and not optional standard deduction. After that, you now deduct your allowable deductions to get your total taxable business income. Then you add your taxable compensation income that we computed in Schedule 2 to get your total taxable income. You can now compute for your tax due using the graduated income tax rates. Now, if you availed for the 8% flat income tax rate, the computation is the same with that of BIR Form 1701A. Take note that the 250,000 deduction is no longer applicable if you have both compensation income and business income. Bakit po, ma'am? Kasi the 250,000 was already considered in computing the tax due for your compensation income. Magiging doble na siya if i-deduct pa natin siya sa iyong business income. Now let's proceed to Schedule 4. Schedule 4 is just the list of your ordinary allowable itemized deductions. Schedule 5 is your special allowable itemized deductions. Schedule 6 will be the computation of your net operating loss carryover if applicable. The Part 6 of Form 1701 is just the summary of your income tax due. Part 7 is your tax credits or payments. Part 8 is your tax relief availment. And Part 9 is the reconciliation of your net income per books against your taxable income. The computation for the tax due for those who are using the graduated income tax rates will be based on this table. We are now done with the discussion on how to compute our income tax and how to fill out the returns for our individual taxpayers. You are now ready to file your income tax returns. Just make sure to remember the deadlines to avoid penalties. The annual income tax returns should be filed on or before April 15 of the following year, while the income tax return for the first quarter should be filed on or before May 15. The second quarter on or before August 15, and the third quarter on or before November 15. You already know how and when to file your returns. Now the question is, when do you pay your income tax? Of course, when you file, because we have a pay-as-you-file system. Where can you file your return? The income tax can be filed and paid with any of the following: the authorized agent banks under the jurisdiction of the RDO where the taxpayer is registered, the revenue collection officer in which the taxpayer has his legal residence or the principal place of business. Just a reminder, you have to file in triplicate copies. That ends our discussion for individual taxpayers. Let us now proceed to partnership and corporation. Let us first learn the kinds of partnership. We have general professional partnership and general co-partnership. General professional partnership is a partnership formed by persons for the sole purpose of exercising their common profession. Example po nito ay yung mga accounting firms and law firms. It shall not be subject to income tax but is required to file a return setting forth the items for gross income and the deductions allowed for each of the partners. General co-partnership, on the other hand, is a partnership other than general professional partnership. It is considered a corporation for tax purposes and is subject to income tax. Now let us define corporation. It is an artificial being created by operation of law, having the rights of succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. We have three forms available for the annual income tax return of our non-individual taxpayers: the 1702EX, the 1702MX, and the 1702RT. The 1702EX is used by corporations, partnership, and other non-individual taxpayers who are exempt under the tax code. Next is 1702MX. This form is used by corporations, partnerships, and other non-individual taxpayers with mixed income subject to multiple income tax rates, or with income subject to special or preferential rates. Lastly, we have 1702RT. This form is used by corporations, partnerships, and other non-individuals subject only to regular income tax rate of 30%. Just like our individual taxpayers, our non-individuals are also required to file quarterly using the form 1702Q. Here's a quick comparison of our three BIR forms for our non-individual taxpayers. Now let us go through our BIR form 1702RT. Part 1 is just the same with all the other forms. It requires the basic information of the taxpayer. Part 2 is the total tax payable. Again, this is just a summary of your tax due, your tax credits, and your penalties. Part 3 is the details of your payment, the same with that of the individual taxpayer's return. Let us now proceed to the Part 4, or the computation part of the form. Of course, you have your sales or revenues, less your sales returns, allowances, and discounts to get your net sales or revenues. Then you deduct your cost of sales or services to get your gross income from operation. You add your other taxable income not subjected to final tax if there's any. Then you deduct the allowable deductions. If you opted for the itemized deduction, you can deduct the following items. Or if you opted for the optional standard deduction, you can deduct the 40% of your gross income. Ma'am, the same lang po ba si optional standard deduction ni individual and non-individual? Yes and no. Yes, because the same silang 40% ang rate. No, because the basis is not the same. For individual taxpayers, the 40% is based on your net sales or revenues, meaning without the benefit of your cost of sales or services. For non-individuals, your 40% will be based on your gross income, meaning after deducting your cost of sales or services. After deducting your allowable deductions, you now get your net taxable income. Then, you multiply it with 30% to get your regular corporate income tax. But our computation doesn't end there. because we also have to compute for the MCIT due. Ma'am, ano po ba yung MCIT? It is the minimum corporate income tax that is 2% of your gross income. It is imposed on a corporation starting on the 4th taxable year, immediately following the year in which such corporation commenced its business operation. Your minimum corporate income tax will be compared to your regular corporate income tax, and whichever is higher will be your tax due. Then you deduct all of your tax credits from your tax due to get your net tax payable. The Part 5 is your tax relief availment. The Part 6, which is the last part of the form, is subdivided into 5 schedules. Schedule 1 is the list of your ordinary allowable itemized deductions, while Schedule 2 is the list of your special allowable itemized deductions. Schedule 3 is the computation of your net operating loss carryover, while Schedule 4 is the computation of your minimum corporate income tax. And lastly, Schedule 5 is the reconciliation of your net income per books against your taxable income. We are now done with the computation of your income tax due. You are now ready to file your return. Always remember to file your annual income tax return on or before April 15 of the following year, while the quarterly income tax return of the non-individual taxpayers is due on the 60th day after the end of the quarter. That ends our discussion for your basic income tax. Thank you for watching this video.